Good morning, traders. Bennett Tyndall with tradinganalysis.com. Happy Wednesday, January 27th to you all. Thank you for tuning in this morning. Can't believe we're already almost a month through the new year. It's amazing how fast time goes by. So, hey, thanks again for tuning in. We do apologize for not being with you last week. We did not have a show last Wednesday, so hopefully you guys were able to catch our public video updates. If you are not following our public video updates, you can go to youtube.com/trading analysis to subscribe to our trading analysis YouTube channel, where Alex, Terry, and myself post anywhere from 2 to 3 videos each, or 2 to 3 videos throughout the week total. So check that out. And yeah, it's been an interesting start to the new year. We are juggling a couple of different Elliott wave interpretations of the market. Both of them are longer term bullish, which is why we always emphasize time frame when determining how you're gonna handle any possible market correction, or how you're gonna look to potentially structure into an outlined pullback. But overall, we do anticipate any corrective pullback that does occur to be a viable situation. So before we dive into the hard right edge of the chart, we're gonna go ahead and bring in the trading analysis team here. So let's go ahead and get them in. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Morning, guys.
What's happening?
Good morning, guys.
Yeah, it's like springtime down here in southeast Texas. We've been enjoying some nice break in the winter. Nice
it has
weather,
been nice. It has been nice. It's been certainly a good change from 6 inches of snow
a couple of weeks ago. Yeah,
I had a lot of fun with the snow.
4 inches.
Yeah, it was anywhere from 4 to 6 inches, depending on whereabouts in the area. But it was fun. It was fun. Yeah. The only other time it snowed here in Texas was I think it was the first New Year's I was here, and it was, I don't know, maybe an inch of snow. Certainly nothing like we saw that day. So it'll be interesting to see what the rest of the year brings in terms of weather. Texas is very interesting. You can experience all 4 seasons in like a 10-minute period. So
yeah.
At least that's how it seems.
We had a little bit of snow here as well, but it passed
Really?
very quickly. So yeah,
Nice.
Just a few days. Yeah, it's a fat day today, so
Yep.
from
Yeah.
this perspective, we're waiting.
Yep, it's going to get interesting. We've got, you can see futures are down this morning in the pre-market. We are back hearing from large cap tech. We've seen Microsoft and AMD report yesterday. We'll hear from Apple today after the bell. So yeah, it's going to be a fun week.
Oh yeah, Microsoft last night, boom, kaboom, nice big breakout after hours. But we'll see how that turns out for the rest of the week. But that could be a potential indication of return for large cap. I won't steal my own thunder, but we're going to talk about that here in a moment when we get to the sector rotation.
Yeah, a lot of tech has, and even a lot of discretionary charts have been in consolidation since September of last year and even July of last year for some of them. So it's nice to see that breakout from really healthy consolidation finally taking place. So let's jump into it. I'll take you into the hard right edge of the chart. We'll take a look at the indexes, then we'll move into sector focus, and then we're going to hear from Alex. I know you guys are interested to see what he's got in terms of gold and oil. We'll also have he'll be hosting tomorrow morning his crypto focus show, Crypto Lab. So don't forget to check that out as well. So let's get into it, jumping into the hard right edge. Good morning once again. So let's dive into it. We're going to go into the Motive Wave platform. One of the kind of 2 primary tools that we utilize here at Trading Analysis. In addition to Motive Wave, we're also utilizing Optima, which is a fantastic piece of software. We're going to have a lot more on that in the near future. So jumping into it, we're taking a look at the S&P 500 chart. And if you did watch last night's public video update, or I should say Monday's public video update, some of this might be a bit of a repeat, but I wanted to take you through excuse me, some key levels that I feel you should all be aware of going into what I feel is a very thick zone of resistance for the major indexes. So looking at the S&P 500, excuse me, one second. All those cedar fever allergies, it's incredible. The first time I saw a video of somebody shaking a tree and seeing the just cloud of pollen. It was kind of frightening. But all right, so going back to the March 2020 lows, my goodness, it's been about a 75% or so advance in the S&P off of those price levels. You'll notice we completed a beautiful 335 Elliott wave flat. The C wave was just shy of a 127.2% external retracement of B, so very appropriate flat structure there. And the move off the March lows has really been a very challenging count from an Elliott wave perspective, given the overlap of many of the corrections. We've had, of course, obviously some mixed sentiment coming off of such a significant market decline. And the way I've been tracking this, and I still continue to view this as the preferred interpretation, because Elliott wave is all about possibilities. Elliott wave is a roadmap of possibilities. Typically, we have a preferred interpretation and a secondary alternate count to kind of fall back on in the event Plan A does not go your direction. But it's never a certainty. And that's why I feel a lot of people have a tendency to go wrong with Elliott wave, in that they do use it for evil, such as Todd has talked about before. Looking at every 5-wave move that has to be the count, and we have to go into a large correction. So this is one of the interpretations which suggests that we are nearing a completed 5-wave advance that originates off the March low. Coming out of the October 30th low, which completed the largest correction since the March correction. So from September through October 30th, we corrected to the tune of about 10.5% in the S&P. We've been focusing in on this kind of final 5-wave move of this subdivision. Let's get off the daily chart and let's focus in once again, as we have been doing, on blue wave 5. So off of the daily time frame down to in fact, let's go to a 1-hour chart to start. You can see that circle that we just dropped on the daily for reference. So going into November 9th, we rallied sharply. That was the last clear mode of impulsive advance within this particular rally. We have a wave 2 correction. We rally into the December 9th high. December 9th high was 161.8% of orange 1, very typical of a third wave position. We called orange wave 4 as a buying opportunity. We called green wave 4 as a buying opportunity. However, the correction that we just experienced kind of to start out the week is also a fourth wave position, which should yield new highs, and it has since yielded new highs into yesterday's print. We are now facing the possibility that we are printing what's referred to as an ending diagonal. And this particular ending diagonal in the fifth wave position is of the contracting variety. And simply put, you have progressively smaller portions of the structure. So 3 is a shorter advance than wave 1, 4 is a smaller correction than 2, and thus 5 is then going to be shorter than wave 3. So far, this particular interpretation is valid. The current subdivision of this ending diagonal can be viewed a couple of different ways. The move in the pre-market this morning, we had outlined for our members in the form of a B wave down to about 38.25. If we start to break lower, you can actually look at this as a completed 3-wave subdivision, because remember, unlike motive impulses, motive diagonals, when of the ending variety, have required 3-wave subdivisions in the 1, 3, and 5 positions. So in this instance, we'd be looking for 3 waves to complete orange wave 5. Now, although wave count invalidation will not come until wave 4 breaks truly the low of this wave 2 at 37.49, given the fact that this is a contracting diagonal, going off the idea that we're going to see a smaller fourth wave compared to wave 2 of the same degree, that tells us that we don't want to see wave 4 be larger than 2.01% in terms of correction. So what we can actually do is drop that on there in log scale and come up with a level that will be kind of an area of concern. So a break south of 37.83 could entertain the idea that the ending diagonal actually did complete, because anything south of 37.83, and you're going to see this orange fourth wave actually be larger than wave 2. Now, what happens if in fact we do get up into this area of resistance that I have outlined at 38.90 to 3400, and we don't roll over to the downside and enter the larger wave 2 correction? In that case, we have a bullish alternate that we've been tracking as well, which basically suggests the September 2nd through October 30th correction was the higher degree orange primary trend, and we're now in wave 1 of orange 3. This would still call for a pullback. However, this particular correction would not violate the October 30th lows. It would require us to maintain support north of 32.33. Let me show you a couple of the signs that I'm watching for to suggest that this particular rally has come to an end and we're going to enter some sort of a pullback, even if it's a shallow pullback to about 32.50 support level. The first sign that I'm watching for is a completed 5-wave decline in the dollar. And in fact, we have seen the S&P, the Nasdaq line up very well with the decline in the dollar, in that the subdivisions of this final 5th wave are near identical. And Alex will show you here later on in the show, we are looking for an additional move lower in the dollar index, which at that point will have a completed 5-wave decline in the dollar, completed 5-wave advance in the indexes. On top of that, a third sign that I'm watching for as a possible sign to help pinpoint this reversal, if in fact we do get it, would be the divergence of the put-call ratio. And this is a market internal that we've looked at previously. It's often used as a contrarian indicator. And what we've been watching for is a divergence of the 9-day simple moving average relative to price action in the S&P. Said otherwise, you can see the February 2020 market top. Call buying sets a high, so market sentiment, bullish market sentiment sets an extreme that exceeded that of anything in the past 2 years. Everything consolidates and call buying fails to confirm the new high. We're now set up for potentially a very similar situation. So if we see a 5-wave decline in the dollar come to completion, which suggests a counter trend corrective rally to the upside in the dollar is going to unfold, add to that the 5-wave completion to the upside in stocks, and this possible divergence, those are the times, those are the 3 signs that I'd be watching for to possibly enter a short index trade or even just a long volatility trade. Now, once again, I did mention that I think this is going to be a viable corrective pullback. Taking you to the weekly chart, going back to the credit crisis lows in 2009, that's when we begin the cycle degree trend. And the cycle degree trend has been unfolding quite well. You'll notice within green wave 3, we have our 2, 4, 3 Elliott wave trend channel giving us the 5th wave resistance zone and 5th wave top. Green wave 3 was 161.8% of green 1. We have an ABC correction, ABC flat. Wave 4 squares up to time elapsed in wave 2, so that's the guideline that corrections of the same degree will tend towards equality, either in duration or magnitude. And from here, the only way to suggest a much larger correction, such as some of those out there are suggesting is going to unfold, would happen is in the event that the 5-wave rally off the March low was in fact of the higher degree trend, which puts it into the primary degree structure, which would then complete green wave 5 and set us up for a larger pullback. I don't see that as a possibility. That would call for a 5th wave that was quite short in terms of time elapsed compared to not only wave 1, but the other progressions along the way of this structure. So I think this proves to just be wave 1 of green 5, and orange wave 2 is a viable entry. So off the weekly, back to the daily, just to mention the fact that this is a wave 2 position. So we could see wave 2 take us to the previous 4th and complete. We see a catalyst for upside and we continue higher. So just because we have this ABC move lined up down to possibly 3,000 doesn't mean we're going to see that significant of a market correction. So that's the S&P 500. If we take a look quickly at the Nasdaq 100, you'll see in the Nasdaq 100, we're seeing a very similar situation in that we're kind of losing the angle, the aggressive angle of ascent that was exhibited throughout the majority of this advance. Since the October 30th lows in the Nasdaq 100, price action has been a little bit more lazy and kind of meandering in nature with a lot of overlap, as you can see in this particular trend. So here in the NDX, we don't have overlap, so we don't have an ending diagonal in the Nasdaq 100. The Nasdaq 100, you'll notice the pullback on the 25th, look where we bounced in terms of support on the 25th. The support level came in at equality of wave 4 as compared to wave 2. So simply put, the correction, the magnitude of correction in wave 4 found support at equality to the magnitude of correction in wave 2. That goes back to the guideline that we referenced there in the S&P. So we still think continued upside is a possibility, and this fifth wave breakout is likely going to be carried by the breakout in tech. Speaking of technology, the XLK was another chart that I've been utilizing since the October 30th low to call most of the pullbacks buying opportunities. Here we are with a very similar wave count. Our initial target in this particular instance is going to be equality of orange 5 compared to orange 1. That came in at 132.76 for the XLK, Sector Spider Technology ETF. You'll notice, zooming in, it's kind of been an area of resistance, and we're now trying to push through that. So that's just your initial fifth wave target, and that's of the higher degree trend. If we dive into the blue structure, you'll see that we have fib clustering really as high as 143 to 147. So this final 5-wave move that could prove to be terminal and set us up for a correction larger than anything we've seen since the March low is certainly a possibility and something to be watching, and could take us much higher based on what I see in tech and the breakouts than one would anticipate. So we'll keep our eyes on that. What we're going to do now is I'm going to take you into a commercial break really quickly. We'll be back on the other side of that in about 60 seconds. Mr. Terry Long is going to take you through sector focus, take a look at what he's got going on there, and we'll be back with you guys in just a minute. So hang tight, and we'll be back on the other side of this commercial in about 60 seconds.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to tradinganalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life 7-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to tradinganalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hello, traders. I'm Terry Long with your weekly sector focus. So let's take a look here. What happened last week in the index and the sectors? Now, both the S&P and the Nasdaq pushed higher last week. The S&P up nearly 2%, but the tech-heavy Nasdaq was double that, over 4% on the rise. Now, both of these indexes, I'll note, made new all-time highs as well. Now, possibly we're seeing a return of momentum to large-cap growth stocks. As we can look over here on the sector performance table for last week, you can see that communications was the best performing sector last week, followed by technology and consumer discretionary. And on the opposite end, financials, energy, and materials were last week's worst performers, with financials down about 2%. Let's take a look at Monday's price action. If you'll notice here, Monday, we had this really volatile swing in both the Nasdaq and the S&P. Tuesday's price action is a little bit more muted. But ultimately, Monday's price action resolved higher here in the NDX. And it didn't in the, well, it did just barely in the S&P, as you can see here. Now, Tuesday's trading was much more muted. But I was looking at pre-market futures here a moment ago, and they're all pointing to a lower open on all the indexes as well as gold, silver, and crude. All right, let's switch over here to our rotation. Our leading sectors are now, let's get this back to last week. There we go. Our leading sectors for last week is financials, energy, industrials, materials, discretionary, communications, and technology. All of these sectors are now in a position to, with relative strength greater than a 100, means that they're outperforming the benchmark. Now, if you notice what Monday and Tuesday's price action did here, we're starting to see some slide here in financials and energy, but it looks to me like energy is overtaking financials just a bit here. Now, there's two important hooks that I want you to take note of here that I see. In last week's surge in technology, we've now got a confirmed hook back to the northeast. This is what I've been looking for and talking about for several weeks. On the opposite end, I'm actually seeing financials start to hook south, which is going to indicate a period of sideways to lower price action likely at hand in financial stocks. Now, the energy sector is also seeing a little bit of momentum decay. Its heading is still pushing to the right, but it is now moving in a southeasterly direction, whereas previously it was a northeasterly heading. So we're starting to see a little rollover in those two guys. And indeed, this week's price action in energy and financial says those guys are going to continue. And there's Monday and Tuesday's ad. If that last little tick is just Monday and Tuesday's price action, you can see this dramatic loss in momentum. It's going to mean a period of consolidation and sideways price action there. Now, down here in this weakening quadrant, the industrials and the materials, they're seen with a little bit of relative strength slippage, but the vectors are very short, so they're fairly comfortable holding their relative strength position, although this one in industrials has accelerated a bit in the last week. Consumer discretionary also here. Consumer discretionary started its hook earlier, and it's now tracking back northeast with technology. Let's take a quick look here at growth and value. On the weekly RRG, you can see the hook to the north formed in the IVW and a hook south in the IVE. And even on the daily rotation here, here's a little bit of an animation in the daily. You can see how rapidly large cap growth is pushed out of the lagging quadrant back up into improved. Value is making the opposite move there. All right, so we're going to move on into sector focus. I get my notes straight here. Let's talk about the materials sector this week. Now, the materials sector, like I said, is behaving similarly to the industrial sector. And however, I do see several stocks in this sector continuing to see rising momentum. And, this rising momentum more than likely offsets the declining momentum that we're seeing in a few stocks. So why is materials so resilient? Is because there's a balance going on here, right? Now, gold continues to be in a consolidation mode. Alex is going to talk to you about that. So I don't see much progress at the moment in the GDX stocks. Here are the GDX, although there is some northerly momentum starting to show up. We really need to get gold out of its consolidation phase before these gold miners are going to start taking off again. All right. So in the meantime, what do? We want to build our watch list. I'm going to explore some of the individual industry subgroups within the materials sector here. And there are 9 distinct industry groups, and this table is sorted by the relative strength. Let's see, there we go. Get it sorted by the relative strength ratio. And we've got non-ferrous metals, aluminum and paper, specialty chemicals, iron, and packaging. All of these are outperforming. And the underperforming is commodity chemicals, mining, and gold mining. Now both paper and specialty chemicals, here's the specialty chemicals group. Let's see, it is the CX. This is specialty chemicals. We've seen these guys, both of them riding high northeasterly here. They're recently starting to take a turn and losing some momentum, just as this aluminum sector is dropping, and so is the non-ferrous metals. Okay, containers and packaging is also losing momentum, and it's actually pushed down here into this weakening quadrant. Commodity chemicals seeing some rising momentum, but its relative strength is really just at par here with the S&P. And although this last little tip there, again, that's Monday and Tuesday's price action, seeing a little bit of a decline in some of those stocks there. Now, the most stable index that I see here is this one right here, and this is the iron and steel index. And as you can see, it's just been holding a very slight momentum and slight relative strength lead. It's not, its tail is very short, so it's not been moving much. So this sector has got a lot of strength in it. Let's jump on over here into the groups, and let's drill down into this. So let me find my steel. Let me find my group of iron and steel. There we go. And again, this is sorted by relative strength ratio. And you can see U.S. Steel, symbol X for U.S. Steel. It's got 148 relative strength ratio. And it's way out in the lead, as you can see here. It's starting to lose a little bit of momentum, but that's nothing to be worried about. I'm really concerned if I have this in my portfolio, I'm going to continue holding it because of the relative strength. And I don't mind if it gives up some relative strength. It's got an opportunity to recycle back around when it's way out here like this. Any kind of opportunities I'd want to add to my portfolio, I'd want to be looking at stuff that's continuing to see rising momentum and pushing over here from the improve. I want to see it with rising relative strength as well. And down here is Friedman Industries. This one's coming back out of the weakening quadrant. Here is Gerardo, and some of these are ADRs. So that's what that is. Let's take a look at, I got another group that's really interesting. Let me find this one. This is specialty chemicals. Get the name, your list out here. I applied a size factor on here, which based on the market cap. And I just want to show you these little bubbles for each of these little details represents the relative market cap. So there's a lot of stocks in this group, and you can see that there's a lot of small caps as well as these behemoths here, which are the large caps, such as DuPont, Nutrien, Corteva, Sherwin-Williams down here in the lagging, Ecolab. So really the weighting of the industry group is going to be more heavily weighted due to the market cap of these large caps. So we're more centrally focused over here. Now that said, you've got several stocks that have significantly outperformed the benchmark S&P and pushed way over here to the right. So it's not a time to buy these guys, but certainly if you've got them, good for you. One of the things, let's see here. There's one in here that caught my attention. Yeah, here it is, Scott's Miracle-Gro. Let me check out a price chart here of Scott's Miracle-Gro. And as you can see, this guy's been on a bit of a bull run since breaking out of a consolidation period in early December. I don't know about you, but I think maybe the cannabis boom might have something to do with that. So I'm going to leave it there, and that's all I have for now. But I bet you Bennett's already got an Elliott wave count on this, and I'm going to turn it back over to you, Bennett.
Much appreciated. Thank you so much, Terry. Yeah, I was actually just looking at that chart before we got started after you had mentioned it there, and nice move in development off of the March low. It actually looks like we might be coming out of a fourth wave, finding support there at about a 38% retracement. We'll take a look at that chart at the end of the session here, but we're going to head off to commercial. We'll be back on the other side of commercial with Mr. Alex. He'll take us through a bit of a macro overview. So sit tight, relax, and we'll be back in 60 seconds or so.
Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients in Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at tradinganalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream.
Hey guys, I hope you are all well and sound. So let's go through a little bit of macro FX and cryptos. Let's start with dollar index, and as you know already, we have been tracking successfully this move down from March 2020 in a 5-wave movement. So there is a move down in 1, up into nice push in a wave 3, orange wave 3 to 1618 usual fib level. We had a pullback in a wave 4, and now we are tracking this potential last sequence. So it's always very tricky to follow these last sequences, because I mean, how do you know if it is done here and we're going to just rip off, or we have one more wave to go? For now, drilling down to a smaller time frame, I'm going to show you what I'm thinking here. So firstly, in Elliott wave, we have a clear wave count invalidation, so the move above 93 levels in dollar index will definitely mean that the dollar completed this cycle from the March 2020, and that we are gonna see a larger corrective ABC pullback. But I'm still not gonna ascribe that yet. Current consolidation doesn't look so impulsive. So if you look the wave structure on this smaller time frame, so this is the 3-hour chart, from this orange wave 1, we have been moving down in a wave 1 and 2, very nice subdivisions in a wave 3. So I'm going to close this up closer so you can see. Here I've been noticing this sideways consolidation, which might be a triangle. So when always you have a triangles, that cannot be a wave 2. Possibly it's just a wave B. Fed is today. So I apologize. I don't know what's today. Allergies here as well. Serbia. Okay, so I apologize. So we count this as a leading diagonal in a 5 waves up. So there is a wave 1 and 2, up in 3, 4, and 5. And now this consolidation may signal us there is just one more small push on the upside in the wave C. So there is a triangle B up in C, and usual stopping place in this type of consolidations are 0.618, which will take us to 91.03. And if you see a time dimension, we sometimes look, basically on currencies, we always look at, because usually they works time elapsed in a wave 2, it's going to be equal very soon with the wave 4, and that's a kind of a good relation between the wave 2 corrective pullback and a wave 4 corrective pullback. Sometimes even more often wave 4s can extend in this time dimension to 161.8. So in that respect, I'm still not gonna assign this orange wave 5 here. I'm gonna look at it more as a corrective pullback, maybe a push above this trend channel, and it's usual for the fourth waves to get out of this kind of a third wave channel, a nice two parallel lines which are kind of following this trend. And I'm going to look for a further move to the downside in an impulsive manner towards this 0.6185 for a wave 5, which means that we projected the 0.618 target like from the wave 1 plus and 3 to get this target on the downside. So I'm still gonna say in a greater probability, dollar will still gonna follow one more downside leg before it starts to make a major corrective pullback on the upside. Some of the targets we look for the upside is around, let's say, 50% retracement. So this ABC can be structured possibly in a three-wave correction. Maybe we're going to get something more complex. But anyhow, 95.72, 97.57 will be the levels which I'm going to look for a possible end of this corrective pullback, which might take time to unfold, maybe even a month or two before we get some signs for the further weakness of the dollar. If we look some of the corresponding markets, we see exactly the same picture. Bennett already explained, and there is a well-known correlation between this risk off, risk on. So S&P down, dollar up. So we're going to look the emerging markets, which are extending very much now on this five-wave move on the upside. So we are some around there, possibly to complete. We are still waiting the signs for the five-wave move down to confirm the reversal. Also, oil in our wave count looks as it has one more push on the upside. So we have this as a 1, 2, 3, 4, and 5. So a little bit more upside and then a possible reversal in this wave too. So what this tells us is that actually we have a little bit more to go before dollar stage a very abrupt and very large reversal. We can also visit some of the FX pair. We see there same picture. So let's go and visit one of the well indicator for the risk off, risk on, which is the Aussie dollar. So current move down, it's very corrective in its nature. So as you can see, there is only three-wave consolidation here. So I cannot count this impulsively yet to the downside. Also, a leading diagonal is very questionable. So I'm going to ascribe this as a corrective pullback in a wave 4, and we'll expect one more push wave on the upside to pair that up with all of the assets classes I'm looking. As the Bitcoin is concerned, we have a little bit more downside pressure currently, but I'm still going to hold the view that this is still a corrective pullback, either in a triangle or in a more complex manner, going even below this 28,647. So this is my wave count invalidation for a simple ABC. If I do a complex one, we should get a little bit lower and then reverse on the upside. I also have one more additional wave count where I track this possibility as a 5 waves down in A, up in B, and then expanding diagonal in a C wave, which should reach, let's say, 26, 28,000 before we reverse on the upside. So we are very well aware that we are in a possibly a last move down in dollar, and it is going to reflect on all assets classes across the spectrum on the counter trend move. If the dollar moves on the upside, the other assets class might move downside, and we are very well aware to be positioned correctly, because in this stage of these trends, you are not supposed to take some wider risk for the continuation of the current trend. So that was a short update for me. Sorry on the coughing, guys. It means that allergies are moving through the space. end time here in Serbia as well. So we're gonna, of course, update you in our daily videos regarding all of these assets classes. So track that. So back to you, Bennett.
Much appreciated. Thank you so much there, Alex. Yeah, I think I'm just rubbing off on you this morning. It's probably my coughing here out of the open. So it happens. It happens. So hey guys, thank you so much for tuning in. What was that, Terry?
Yeah, look at. So we have social distancing. We're far enough apart, aren't we? Look,
This is true. I think we got about 6 feet.
Alex is over here. You're over here.
Oh, I love it. And there's the.
It works fine, but it seems that these allergies are starting early. I usually don't cough, but I'm as well as you, Bennett. As long as I see someone in the air from the plants, I start coughing. So it's the same situation.
You know, it's crazy. In California, the allergies really didn't bother me, but here in Texas, the cedar, it's different. It's a little bit different here in the South. So, hey guys, thank you for tuning in this morning and taking time out of your day. If you did enjoy the content, please give it a thumbs up. Lets the YouTube algorithm know that you are enjoying the content, helps distribute it accordingly throughout the industry. We'd hope you subscribe, turn on notifications if you want to stay up to date. You can also check us out at tradinganalysis.com. Our other YouTube channel, so this is Todd Gordon, our CEO and founder's channel. We also have our Trading Analysis channel. You can go to youtube.com/trading analysis. Alex will be back with you guys tomorrow morning, 9 a.m. Eastern on that channel for his Crypto Lab live stream show. It's always a good time. So markets are open. We'll keep our eyes on the open here. And members, we'll see you in about half an hour for the member webinar. Any final words of wisdom before we send them off here, team?
Well, be careful. As we showed up, there is many potential developments here in front, so be careful on the upside. Dollar might return with a vengeance, that I will say.
All right, sounds good. Appreciate it. Thanks again. Give it a thumbs up if you enjoyed, and we will see you guys all next week, same time, same place. Have a good one. See ya.
Bye-bye.